When you're seeing a company, you're obviously going to be liaising with various members of the management team, but what are the sort of questions that you're going to be asking the CEO?
What's your timeline? How are you going to do it? What are the steps in execution to get it? It'll be specific, like what kind of a debt equity ratio are you looking for? Where do you think you're going to get that debt and that equity? What stage in the permitting are you at? Have there been any notices, for example? When often in the community relations process, the community will file notices that have to be responded to. You can ask direct questions, and when you're looking into the whites of their eyes, it's a lot harder for them to not give you a direct answer.
So, putting your geologist hat on, when you're going to meet the CEO, would you rather he had a finance background, or would you rather he had a geology background?
Finance, definitely.
Right.
Geologists are essential to the mining industry. I don't want to underplay their value. Every bit of metal I'm wearing, at some point of time, some geologist had to go kick rocks and use his expertise and knowledge to find them and develop a resource that was economic. But ultimately, a mine is a business. It's not a science experiment, it's a business. And the ability to economically extract those metals from the ground, to finance that extraction and to sell it at a profit, which is ultimately what equity investors want and need, that's a business. And often a businessman is well placed to be able to make those decisions better than a scientist who's slightly in love with his rocks. Or I've never met an engineer who didn't want to build a mine. But a businessman will say, actually, these numbers just don't add up. We shouldn't be the question of should we build this mine? That's a businessman's question. And it's something that often the geoscientists are loath to ask.
You place great importance in corporate governance. What's the checklist that you would use in order to...
Corporate governance is largely about the board. But I like to see a diversity on the board. And everyone thinks, oh, you want a woman on the board. I actually don't want a woman on the board. I think that generally, statistically, companies with women on the board have the kind of diverse board structure that has been successful. The reality is mining companies especially, but companies generally with women on their boards outperform those without. But I don't know what came first, the woman on the board or the well-functioning board that realized they needed diversity. A board needs to ask the right questions. They need to ask if this mining company is environmentally sound. Is the imprint they're making on the environment acceptable? And it's a practical question. Is this community going to benefit from this and continue to want us here? Are we providing enough to the community to make up for what we're taking away? Are we taking the appropriate risks? Is the risk too much or too little? Diversity on a board is about asking the right questions and making hard decisions about how you deploy investors' money. And in my mind, that's best done with diversity at the board level, and that means diversity of backgrounds and skill sets. So some finance background, some accounting background, some legal background, geological background and engineering background, but also, different perspectives. I don't know how often I have seen a mining company with, 6 to 8, 60 to 70-year-old men from one country. If you're mining in deepest, darkest Africa, it might help to have someone from deepest, darkest Africa on the board to give you the lay of the land, to tell you what's practical and what's not practical. A good board is a well thought out thing, and it is there to protect investor interests. And their primary job is to protect shareholders and to balance the risk that company takes. And that's often forgotten. And I think that people need to look a lot more carefully at boards and make sure they're properly constituted to protect investor interests and consider intelligently all the risks. Now, you can't make money without making risks, so I'm not going to suggest that boards get rid of risk, but it's about balancing those risks properly. And that's something only a good, diverse board and a diverse of experience, diverse of age, culture, and background can do for you.